Guys, welcome to the channel and welcome back to another video. Better have my mic over here, guys. Let me know that you can hear me okay. And I think we're okay with our microphone, right? Guys, let me know you can hear me okay as you come into the live today. We are here. Give me a thumbs up if you can hear me. And as you come in, give me a like, give me a subscribe, give me a share. Who knows, guys? But the first things first, what are we talking about today on this live? We are talking about, let me tap that real quick. Okay, what are we talking about? We're talking about the Fed, the warning that the Fed is pretty much on standby right now because of the latest CPI report, latest inflation report we got just a few days ago. So appreciate you guys being here. Hey, John, good to have you here. Give me a thumbs up if you can hear me okay. Let me know that my audio is working. I think it's working. Let's check it. Yep, I think we're on and we're good. Thank you for the thumbs up. I appreciate it, guys. So, what's going on with the Fed? Let's have this conversation about what's going on and what decision the Fed has to make and why they have to make it and why it's becoming a harder and harder decision to make regarding the Fed funds rate, right? Inflation has been super duper stubborn, and we're going to talk about this warning to Americans and why the Fed is on standby in terms of the federal funds rate. And also, guys, as you come in, let me know where you're coming from, guys. What city, what state, what county, what country, what hemisphere, what continent. Let me know where you're at, guys. I always like to know where we got folks coming in from, all the cities. Let's see here. We got E. Poston. Thanks for checking in here. Colorado. Wow, I was just checking out Colorado newspaper not long ago. Chicago, Illinois is in the house. Kenny, Toledo is in here. Divine Logic is here. I appreciate you being here from Toledo, Ohio, and from Chi-Town. Nashville's here. Philly's in the house. Philadelphia, Pennsylvania, one of the oldest states in America. Westchester County, New York. England is in the house. The UK, good to have you here. Ohio again, good. Dion, glad to have you here. Columbus in Ohio, fantastic. So we got folks checking from all over the place. I don't know where 804 is, Blue Sky. I don't know what zip code or what area code that is. You got to tell me. So, guys, we want to have the conversation about the Fed because the Fed, it has something to do with you as a consumer and your money, your bottom line, money that you have to save, to invest, to buy food, to go to the concert, whatever it is you want to do with your money. It's all affected by what the Fed does. That's why the Fed even exists, right? The Fed exists so they can control the money and monetary policy, and they control our spending, right? Because they can make it easy. They can make money cost less. They can make money cost more. They do all these things. They can add to the money supply by increasing the assets on their balance sheet, right? When they go out and do quantitative easing and they go buy bonds and they add money to add some liquidity to the economy, they control what we do. So what they do trickles down and affects us as consumers, and we have to know that, right? That's how we know what we're going to do and what's going on with our money, by following the money at the top. Follow the money at the top, Fed, right? House, Senate, all of Congress, right? You follow that money. It's going to help you understand what's going on with your money. It's going to tell you why bread is $3 a loaf instead of $2.80 a loaf, right? So we want to have the conversation about the Fed is on standby and get ready for higher inflation for a longer period of time. All right. Let's see here. Hey, got somebody from Maryland checking in. Good to have you. Ann Arbor, Michigan's in the house as well. Good to have you as well. Good to have you as well from Michigan. I wonder, is it still winter in Michigan? Michigan gets cold, man, especially central and northern Michigan. But also around those waters, right? The 5 Great Lakes are around there too, I think. All right, so CPI numbers came out this week. The CPI numbers. Oh, by the way, guys, before I jump in, smash the like button, please, as we start this conversation. Smash the like button for me, right? please, and share this video. Share it with somebody who's trying to understand, learn, figure out what's going on with the economy. Feel free to share it. Let me see here. I'm going to tap this right here, and I'm going to get rid of that at the bottom. Don't need that. All right. So let's talk about this, guys, because the CPI numbers came out this week, and I'm telling you, it ain't looking as good as we thought it would look. Let's put it like that, right? Hey, Anjanette from Michigan, good to have you. CPI numbers came out, and the inflation is looking what they call sticky, right? Stubborn, right? I want to talk about what the CPI numbers showed and what's happening with this inflation and what this means for us and what we should still be doing or doing as investors or as consumers, right? And then later I want to talk about, basically why you need to make sure that you're still in the market, right? We'll talk about that a little bit later, and then we'll do a little Q&A, whatever, guys. We'll have some fun here. So, and because I have a crazy statistic that it's probably going to blow you away about why you need to stay in the market and stop jumping in and jumping out of the stock market. So we'll talk about that. Let's see here. We got somebody from San Antonio. Good to have you. LD Sims, good to have you. So the news wasn't good, guys. For the news about the CPI inflation, it wasn't good for the Fed. It wasn't good, and it wasn't good for the Fed. We'll talk about that later, too. It wasn't good for the president, right? President Joe Biden. This is an election year, guys. In an election year, what's happening, the incumbent really pays attention to what's going on with the money, because when the money looks good, the incumbent can come out and say, hey, the economy is as strong as it's been in the last 5 years. The economy is very strong, and we're putting more food on your table and for your kids, right? This is what the incumbent will say in an election year. And then, of course, the opponent is going to come out and say, hey, look at this crabby economy. It looks like garbage. It's horrible. You got unemployment is way too high, and people can't afford to buy a loaf of bread, right? This is what you hear from the opponent, right? This happens every 4 years, guys. It's nothing new, right? Every 4 years, the incumbent is wanting that economy to look good, and the person that's challenging them is wanting that economy to look horrible. So it wasn't good. What the latest CPI numbers wasn't good for the Fed. It wasn't good for Joe Biden, the president, and it wasn't good for potentially the labor market, right? Right now, I think our last report of unemployment, we're at 3.9%. Somebody correct me if I'm wrong, but 3.9%. Okay. Unemployment has crept up a little bit. It was 3.4, 3.6, 3.5, 3.7, and it's crept up to about 3.9 right now. So something to think about, guys, something to think about. It wasn't good news all the way around, and it wasn't good news for consumers either, right? Because we as consumers, if inflation doesn't go down, then that means the prices that we pay continue to go up at a higher pace, right? That's for me and you. So that's why I named the video Warning to Americans. The Fed is on standby. Get ready for potential slight increase, even more, of inflation, right? The data from the CPI is Consumer Price Index, and also the Producer Price Index, which the Producer Price Index is what measures the prices that are paid by producers, right? The people that produce the goods and services. So the CPI measures end products, right? The final product. But the Producer Price Index, which I don't really talk about much on this channel at all, but that measures the prices that are paid by kind of like the wholesalers, the producers and so forth, the producers of goods and services. That also ticked up a little bit last month. So everybody is facing a little bit higher prices. And so it ain't good. It just ain't good when inflation ain't going down, or at least down as much as we want, right? Hey, good afternoon from Boynton Beach, Florida. Good to have you, RC. Tulsa, Oklahoma's checking in as well. Yeah, somebody said another 300 million for Ukraine. Wow. Yeah, that's very interesting, right? So, guys, there's two types of inflation. I want to make sure we're clear on this, right? before I get into inflation, there's CPI, which is normally you see it, they call it headline inflation because it comes across, hey, inflation, blah, blah, blah. Headline inflation, it measures mostly, it's the one that's most commonly reported, right? It's the one we see in the media all the time. We do see the other one, but we don't see it as nearly as much, right? It's the one that's most familiar to us, CPI, right? The other one is the core PCE or core inflation, or sometimes you hear it just as the PCE inflation. That's the one the Fed wants to get down to 2%, by the way. The Fed doesn't want to get the CPI down to 2%, right? Because the CPI includes food and energy, and those are typically volatile, as I talk about on this channel quite a bit. They're volatile. So because of that, the CPI is not what the Fed focuses on to get down to their 2% target. The Fed wants to look at that core PCE to bring down to its 2% target, right? But the CPI is what came out this week, right? And as a matter of fact, a couple days ago, showed trouble. And I mean trouble for the average consumer, guys. Trouble, trouble, trouble. Guys, let me know in the comments section, chat section below, where's the biggest place you've noticed inflation being high? I'm curious if you've noticed inflation being high. Where is the one place that you've noticed? I mean, for me, it's been food. I mean, I can just tell you flat out, food is crazy, right? I don't know about for you guys, but for me, it's been food. Looking at food in the last 2 or 3 years, the fact that, you know, you used to be what you could get for $200 at the grocery store, you can only probably get about $140 worth of right now. Food is crazy high. I don't know if you guys have seen that. Somebody said housing. Yeah, rental markets, right? You look at rents. I mean, rents has been crazy. There's a component of inflation that includes housing and rents, right? And that's a big part of it. And obviously somebody said food, groceries. Other folks have seen that same thing. Auto insurance. Wow, that's been really high also. Good thought, Reba and Buckner. Auto insurance has really crept up. I think I read an article. I might still have it up here. I might show that article to you guys in a bit. So inflation being the rate, guys, that which prices are increasing on a basket of goods. And in that basket of goods is where you have all these finished products in the basket of goods. I'm going to show you a chart here. If you're not watching on YouTube, you may want to go over to Smart Money Bro on YouTube, because I think I'm going to share my screen on a few of these guys and just show you a few things. And I don't know if it'll show on the other places where I'm actually broadcasting on. But and then, of course, guys, don't forget, there's inflation, the rate at which prices go up, and then there's deflation, right, where prices are decreased. That basket of good prices are decreasing. Goods and services are decreasing over a set period of time. So the deal is that, hey, it's all tracked, right? The changes in the PCI, prices of consumer goods and services, is all tracked on a monthly and a yearly basis. So the latest readings that came out a couple days ago showed that the CPI, this is CPI, so it includes food and energy, showed that CPI was up 3.2% over last year, right? This time last year, it's 3.2% higher, the CPI is, right? Now, the deal with that is that's year over year, right? Right? But the CPI was also up 0.4% from just the month previous. So month over month, inflation increased as well, right? All that's according to, I think, the Bureau of Labor Statistics is where that comes from, right? So yes, we know that inflation has gone down. Inflation 2 years ago, a year and a half ago at this time, was the CPI was over 9%, right? It was crazy a couple of summers ago, right? But it's still higher than we want it to be. And we can still feel it, right? We still feel it in food. We still feel it in, you name it, rents, right? So we feel it, right? Somebody said Facebook Marketplace is insane. Hey, thanks, Jason. I appreciate it. Been looking to buy an investor property, but the interest rates and the cost of the properties have been much higher. The cost of real estate is higher. The cost of rents are higher, right? Let's see here. Somebody said food now a luxury for the wealthy. Yeah. Food has been a problem, guys. So let me share my screen with you guys real quick. I'm going to show you a breakdown of inflation that was just read from the previous month, and some of the main categories year over year. Let me see how I can share my screen, guys. Bear with me here. Let's see here. Let's see. Is this it? Yeah, let's try to share this screen, guys. I am going to go to the corner and share my screen with you. Let's see. All right. So, let's see where we are. The inflation breakdown for last month, right? Some of the core categories, main categories, right? How is inflation doing? Period. Right. And this is a real breakdown. So when I say inflation is a basket of goods, I mean it's a basket of a whole bunch of goods broken down. As you see in this chart, guys, it's broken down into food is a general category, but it's broken down into everything, right? Beef, juices, candy, right? You look at juices and drinks, 27%. Wow. That may explain why when you go and get that juice, it's, instead of being, $5, it's now $6.25, right? But you look at candy and chewing gum, tomatoes, etc. All that is on here, as well as if you scroll down just a tad bit, you'll see that there's also, of course, carbonated drinks. This is the inflation on a year over year price, right? For these items broken down, right? It even breaks it down for food at vending machines, right? Snacks, full service meals away from home. And here's some items less food and energy, right? And it breaks it all the way down to domestic services, non-prescription drugs. There's a lot of things that have increased quite a bit, right? Just looking at this chart, guys. I mean, and this is all these things are included in the basket of goods when they go figure out what is the CPI. So as you can see, there's a lot of things that have actually increased quite a bit, right? Way more than we'd want to see, right? From chewing gum to you name it, right? So just want to kind of pop that up there and show you guys that there's a lot out there in terms of what's increased, what hasn't increased. I have another one actually to show you the deflation, but I won't go there just yet. But matter of fact, let's do it. Let me show you the prices on deflation. The prices that are going actually went down a little bit, where inflation was actually down a tad bit, right? Let me see if I can find that chart for you real quick. But I like to look at these charts because these charts give us an idea of actually what I'm talking about instead of just me just yapping at my gums, right? Here's the deflation chart right here. Pretty interesting. Where prices fell. And this chart is actually put out yesterday, so it's pretty recent. The U.S. is still grappling with higher inflation. Overall, the U.S. is in a disinflationary process or a slowdown of inflation, right? But here's some deflation. It's the opposite of inflation. Some of the things that are in the basket that actually went down a little bit. What's number one up there, guys? Eggs, right? Right? I mean, eggs has gone down, meaning that the prices of eggs have gone down the other direction. Instead of inflating, they deflated, right? Same with apples, lettuce, all the way. This breaks it down all the way for fish and seafood, frozen, ham, right? These are the negative numbers, the things that went down in value since last year. Milk, roasted coffee, potatoes, pork chops, bananas, rice is even down, right? So something to think about. Even gas services, right? And here's some of the energy, because we said CPI includes energy and food, right? So gas service has slightly went down as well. Piped. That's piped, not at the fuel gas station, right? So lots of things have gone down as well, but overall, it led to a 3.2% increase in the CPI overall, right? So something to think about. That's something for us as spenders. It's something to think about, guys. Why are these numbers significant for us? Why are these numbers significant for us is the question, right? It's significant because, guys, in less than a week, you got the Fed, and they're going to meet again, right? They've got their FOMC, their Federal Open Market Committee, that's going to meet March 19th, March 20th, I believe. And when they meet, they're going to decide if they should raise the Fed funds rate, which stands at 5.25% to 5.5% right now. Fed funds rate is the rate that banks charge one another for overnight lending, and then they pass those rates on to us in terms of short-term loans that we want to take for, our credit card, because a credit card is a loan, automobile loans, personal loans, whatever these short-term loans, when the Fed funds rate increases, and now those banks have to charge each other, have to pay each other larger amounts for overnight lending, they pass that on to us. So it's important for us to know what the Fed is going to do. If the Fed increases that rates, our interest rates go up. Money becomes more expensive to borrow for us. If the Fed lowers those rates, then money becomes less expensive to us. But keep in mind, or the Fed could actually keep rates the same, not increase, not decrease the Fed funds rate. Keep it at that 5.25% to 5.5%. But keep in mind, guys, when the Fed cuts rates, that's usually an inflationary tool that the Fed has in their toolbox of things to do. When they cut rates, they want you to go out and spend. See, the Fed kind of controls us. We're like puppets on a string almost. When the Fed cuts the rates, they incentivize us to go out and spend money because money now is cheaper. And now we can, instead of getting that car loan at 6%, you can get the car loan at 4.25%, 4.5%, right? That's an inflationary tool that they use, right? Because it spurs and increases spending. And when you when you lower the cost of money, you increase demand, right? And when you increase demand, that means we're out spending more money. Yay, let's go spend. Let's go spend. Money is not 3% to borrow, it's 2% to borrow. Money is not 8% to borrow, it's 5% to borrow. Yes, let's go buy money. Let's go get that loan, this loan, that loan. I'm going to borrow more. And when we borrow more, we're spending more. When spending more, demand goes up. Next thing, demand goes up, prices go up. Inflation goes up. That's inflationary for them to cut the rates. I say all that to say that, hey, when they're going to meet at the end of April, and I don't think, let me just say this point blank, I don't believe the Fed will increase rates. Will decrease rates. I don't believe they're going to cut rates based on all the information we're talking about and looking at right here, guys, right? Why would the Fed cut rates when the Fed knows that if they cut rates, they're just going to increase spending, raise demand? And we already see that the CPI readings show us that this whole thing about inflation going down, it's being very, very stubborn. In fact, inflation is up for the CPI numbers month over month, 0.4%, and year over year, 3.2%. So the Fed is probably going to stand pat and not decrease or cut rates. Let's hope they don't increase rates, right? Because with the inflation going up, the Fed, how does the Fed stop inflation from going up? By increasing the rates, right? They increase, and that's what's happened over the last year and a half, 2 years, guys, is when we had those huge inflationary numbers of 9% for CPI, 6.7% for core PCE inflation. When those numbers were out of control and things were going up so fast, that's why the Fed came in there and increased the Fed funds rate from near zero up to 500 basis points, 5.25% to 5.5%, because they wanted to slow us down from spending. So the equation is this: they raise rates, we stop spending. They lower rates, we go out and spend more, right? Kind of an inverse relationship, right? They raise rates, we spend less. They lower rates, we spend more. Simple, guys. Inflationary to cut rates. Why would they want to put something that's inflationary in place when CPI has just shown us this week that the inflation's going up, right? So the Fed is going to meet a week from now. I don't think they're going to raise rates at all. I think they're going to leave them pat. Let's hope they don't raise rates, right? And most experts are saying that the Fed funds rate probably won't be cut till June. The Fed meets 2 more times before June. They meet next week, and they meet at the very end of April, I believe, beginning of May, April 31st. If there's 30, I think there's 30 days in April. April 30th, May 1st or so, right? So even last week, you had the biannual, the semi-annual meeting. Call it a meeting, but the Fed chair, Jerome Powell, twice a year, he goes and, testifies before Congress, right? The House and the Senate, two separate meetings, right? He said that it will likely be appropriate to begin dialing back policy. That's what he said. We're going to dial back policy at some point this year, right? And so, hey, right now, the economy is not moving in the direction that the Fed wants it to move, right? Because we have higher than expected inflation for longer than we thought it would be, right? So, but if inflation declines in the next month or two, I think we will probably will see a rate cut in June or perhaps July, right? So some of the CPI inflation, guys, that we saw for the month of February, could be blamed on a lot of things, guys. A lot of things, right? Shelter, I think gas at the pump was up a little bit, but gas at the textile at the manufacturer wasn't up as much, right? So we'll see, right? What do we do? Here's my warning to us as Americans. What do we do? What does all this mean for us? Why do I care? Why do I care? You care for two main reasons. Because if you live in America, you are a consumer. And hopefully, if you've been watching this channel and many other channels, you are an investor. Consumer, investor. Why do consumers? I just said it. We're buying the bread. We're buying the milk, right? We're getting gas, right? But as investors, how is the stock market reacting to all this, right? What's happening with our money that we have invested in companies when all this has happened? Here's what you got to do, guys. Let me just kind of run through. Hey, guys, the video is sponsored by Mint Mobile. Check out Mint Mobile, link in the description box below if you're over on YouTube, right? Mint Mobile is inexpensive. And on this channel, we talk about inexpensive things and ways to save money. If you want to save on your premium wireless service, check out Mint Mobile in the description box below. It's premium wireless service. They don't have box stores. They don't have employees that are sitting at the box store for $10 an hour. They don't have any of that. So all that savings is passed on to us, and they use the world's largest 5G network. So it ain't like you got to have drop calls and all this type of stuff. You don't get any of that. You just get a less expensive price for your cell phone bill, basically. So I do partner with Mint Mobile. There's free things also in the description box here on YouTube. Feel free to partake in those things. 24 Laws of Money. Check out my website at smartmoneybro.com, whatever. Lots of stuff there for you to check out. But I just want to say that also, please feel free to share the link. Also, please, if you're not a subscriber, please consider subscribing. And I want you guys to make sure you stay tuned for Saturday. We got a big one on Saturday. Saturday, 11 o'clock in the morning, 11 o'clock a.m. Central Standard Time. We're going to have another full-grown adult conversation about money. Adults talking about money. Stay tuned for that, guys. No holds bar. I try to give it to you raw and not try to give it to you with a lot of fluff and a lot of, go buy my course type stuff. None of that, right? We just talk straight up about money and how to manage and handle money and what's good in terms of how to actually deal with our own money and deal with our own self, right? So that's grown folks talk about money. Stay tuned for part 2 on Saturday, right? So what do we do? What can we do? How do we do? Let me read through the chats real quick, guys. See what you guys are talking about. What does CPI stand for? Consumer Price Index. Let's see. I purchased a very small snack from Sheetz MTO menu. It was $7.20 with no drink. Yes. I never buy. When I go out, I never buy drinks. I always drink water with no ice because ice can be dirty, right? Call me strange, right? Yeah, somebody said Consumer Price Index. Thanks. We got an election year. They are going to decrease rates. We don't know, right? The Fed last week when Jerome Powell, the Fed chair out of the, he's out of New York. The New York Fed is always the Fed chair, by the way. So Jerome Powell said, he said basically that we try to stay in the middle and neutral. That's what he said about the Fed and the Fed's decision making, right? So I don't know, I don't know how that plays with politics, but I can tell you this, guys. Overall, the stock market is typically not as friendly to investors during an election year. Now, if you look at the statistics, the year before an election year, the markets do pretty well on average for the last 100 years or so. But the market during an election year is usually down. I think it's around 6-7% as an average, whereas the year before it's more 12 and 13% as an annual average return. So just I'm talking S&P 500, by the way. But so keep that in mind. Yes, we're in an election year. I don't know what they're going to do. I don't know what's going to happen with rates. We will see, right? Somebody says, how much money has been spent on non-U.S. citizens, food, shelter, cell phones, prepaid? Listen, that immigrant crisis that's going on at the southern border, where you got thousands of immigrants coming over to America, immigrants, migrants, illegal aliens, whatever you call, right? What's the other terms for them, right? People that are coming over, yes, they are there. States are having to spend money. The federal government is having to spend money on those things, right? So that's a big issue, huge issue, right? It's not only a huge issue for money being spent on non-U.S. citizens, but it also is a huge issue because of the labor market and the people that could be added to the labor market as well. So that's on a lot of fronts. Let's see here. Somebody said, "Smart me, bro. What are your thoughts on inflation due to corporate greed? Corporations will charge what people are willing to pay." Good question, Reba Ann. Here's my answer. I think it depends on the industry, right? I think some industries are different than other industries. Sure, there is some price gouging that happens out there. Absolutely, there's price gouging. There's companies out there that want to increase their profits at the detriment to its own consumers, right? To its own customers. We know that price gouging, especially price gouging in areas where people have no alternatives, right? They can't go from, there's no other supplier besides that supplier, right? I think that does happen. But I also think that, it's natural. I say it's the America wants prices to go up, right? We want the GDP to continue to go up. We don't want recession, right? So as consumers, we fuel the greed by actually purchasing the services and the goods on a regular basis. Instead of saying, if everybody in America said, we're going to be super duper frugal, well, guess what happens to the businesses? Right? Guess what happens guess what happens? A recession, right? People stop buying. All of a sudden, demand goes down, prices go way down, deflation, recession, etc. So I think part of it is that we don't want to see that as consumers. So yes, I think corporation and greed does happen, but as consumers, we have a little bit of responsibility too. We got to stop spending so much money, or learn to live on less, or learn to be more frugal, or change a little bit as well. Good question, Reba. Thanks for asking that. You would think an election year should drop the rates somewhat. Yeah, we'll see what happens. Somebody said I cut back a lot. Do I have travel tips? Travel tips? Guys, help her out in the chat. Vanessa put in there, do I have any travel tips? Travel when you have money. That's my travel tip. Don't travel if you're not sure how you're going to pay the lights, you don't have an emergency fund set up, you're only putting 3% into your investments right now. Don't travel like that. Have a firm foundation laid out, put together, and then go kick it. And you'll have a lot more fun when you travel if you got money when you travel. Because when you ever dropped into a city off an airplane, or you drove into a city and you didn't, all these wonderful things happening around you, you couldn't do any of them because you ain't got no money. And then you're traveling with somebody else, and now they can't do stuff because you can't do stuff, or they have to help pay your way. It ain't fun traveling without money. Have money when you travel. That's my best tip. All right. Biden is really screwing up this once great country as policies. Yeah, could be. I need to go check that out. NW, not sure which one. I spoke with a young man who was working at AutoZone. He told me that he and many of his friends have decided to have roommates because they can't afford to live separately. Absolutely. I think that's big. That's happening in America a lot. Earlier, when we were talking about the Fed, we were talking about housing being one of those areas that is real sticky in terms of inflation. Rents are high, and they don't seem to be coming down quick enough, right? So the inflation on rents in the housing market is huge, right? It's having a big, big impact there. Okay, good point. Somebody said deflation is a bigger risk. Yeah, you don't. So the Fed has to play two sides of the stick, right? They got to, play with the rates to make sure we can control inflation, hopefully down to 2%, which is what they want, 2% growth over year. But they also have to make sure that they don't cut rates to the point where everybody stops spending money, or not cut, I mean, raise rates to the point where everybody stops spending money, and then prices go down and down and down and down instead of going up and up and up. Inflation, deflation, right? We don't want that deflation where prices are sinking too fast, right? So we don't want that as well. So let's see here. I believe more people will be moving in together. Yes, more people will be living. If you go to large cities, guys, there's people in large cities, a lot of large cities, that rent out a room in their property, right? Rent out 2 rooms in their property, rent out the basement. That's not common in places in the Midwest. But if you go to big cities, Boston, Seattle, DC, you name it, people are renting out. People are doing like and living like that already, right? Somebody said the Fed is a non-political entity beholden to neither party. Lazarus, absolutely. You're right. You're right. And you're right. That's what they say. Absolutely. Let's see. Somebody said, how do you decide how much to raise the rent on your investment properties? Wow. My investment properties right now, guys, I have 2 rental properties. One property I've only increased the rent maybe once in the past 4 years. I got a good tenant, right? And I could raise the rent if I wanted to, but I'm one of those, I'm a nice landlord, right? If you take care of me, I take care of you. You pay your rent on time. Matter of fact, I even give my tenants a discount. If they pay the rent on time for a full year, no problems. I'll give them $200 off the rent for 1 month, $200 off when we renew for the next year. I'll give you $200 off. I'll give you $300 off. I'll give you $100 off, whatever it may be, right? Because I'd rather keep a good tenant than try to raise their rent $200 and lose a good tenant, right? Because if I lose a good tenant, then my property is empty for a couple of months. So let's say I charge my tenant $1,000 a month, but the going rate is $1,200 a month. So $1,000 a month over 1 year is $12,000. $1,200 a month over the course of 1 year is $14,400. $2,400 difference. But what if I just decide to raise the rent and now my tenant decides to move out, my good tenant moves out. Now the house sits empty for 3 or 4 months while I try to get a new tenant. I just lost $4,800, 4 months worth of rent. I lost $4,800 trying to get an extra $2,400 from the tenant. Doesn't make sense, right? You got to be smart. If I got a good tenant, I'm going to do what I can to keep that tenant and only raise the rent slightly over the course of several years as opposed to trying to throw them a big increase, right? But hey, I only got 2 properties. If I had 200 properties, it might be different. So just something to think about. And then how do I decide? I mean, I look at one of the big things I look at is rents in the area, right? What are rents doing in the area? If rents are $1,200 in the area, okay, I have a justification for charging $1,200. I may charge $1,150, right? Go a little bit under the market, but not too far under the market to undermine the market. If that makes any sense. All right. Hope that answered that, John. Somebody said, let's see. No, I'm actually a human, Blue Sky. What is the key to buying the dip in the stock market? The key to buying the dip in the stock market is to stay in the market. Let me show you guys that. Since you brought that question up, Millie Mill, the key is to stay in the market. I want to share my screen with you guys real quick because I want to show you something that I think is pretty important because this is a big part of what you want to do. No matter what the Fed does with the Fed funds rate, you want to stay in the market and investing in the market the entire time. Okay. You do not want to be jumping in and out of the stock market. Please don't do that. Stay in the market the entire time. I'm going to bring up a statistic for you guys, and this is going to tell you why. This is a really, really big deal. If you watch this channel, you listen to this channel, please hear this point. And if you're on YouTube, check out this right now. I'm going to share something with you that you really, really, really need to know, right? About why you want to stay in the market. Okay. So let me go ahead and see if I can pull it up real quick. But this is pretty much what this entire channel is about, right? It's what the entire channel is about. What I'm going to share with you right here on this right quick. Let's see here. Hopefully it came up. Yep, came up. All right, guys. So here's the deal. If you look at this that I put up here, guys, it shows you that and I'll just read it right here. It's right here, but I'll read it. Trying to time the stock market and predict its movements is a loser's game. I just did a live a couple of days ago that said, I'm no longer investing in single stocks, right? And I'm definitely not jumping in and jumping out, because that's a loser's game. A winner's game is buying and holding. It says, for example, watch this stat here, guys. Over the past 30 years, the S&P 500 stock index had an average 8% return, average annual return of 8%, according to a recent Wells Fargo Investment Institute analysis. Missing the 30 best days in that 30-year span would have reduced your average gains to 1.83%. Reduced your average gains to 1.83%. If you missed the 30 best days in the stock market over the last 30 years, right? Okay, so, and this is from an article off of CNBC. It said, take the emotion out of investing. It's an article from today, actually. During a presidential election, take the emotion out of investing. That's huge, guys. You don't want to, listen, this is why you don't jump in, jump out, because you don't know when to jump in and jump out. You're not that good. I'm just being honest with you. None of us are that good. Not me, not anybody. You're not that good. So when you have an opportunity, you get in the market and you stay in the market. Your job, no matter what the Fed does, right? This is part of my warning to you. The Fed is on standby. Get ready for higher inflation. No matter if we have higher inflation, lower inflation, the Fed raises rates, the Fed lowers the rates, the Fed keeps the rates the same. Your job is to dollar cost average into the stock market as a investor. Dollar cost average into the stock market. $100 a month or $100 a week, $500 a month, $5,000 a month, whatever it may be, same amount no matter when, because you want to be in the market on the 30 best days over the next 30 years, the next 10 years to 15 years. You want to be in the market, and you don't know when those days are. And if you come a day late after the best 30 days, a day late every time, you're missing the huge upswing, right? So you want to be buying the dips. You want to be staying in the market. If you stay in the market, dollar cost average, you're buying the dips, right? Do you want to throw a little extra at the dips? That's fine. Nothing wrong with that at all. But you have to stop jumping in and out of the stock market. Stop playing that game, guys. There ain't a lot of Michael Jordans, right? There's only a couple of LeBron James, Michael, LeBron, Kareem, right? There ain't a whole lot of Warren Buffetts, right? And I got a real strong feeling that nobody in the chat is Warren Buffett. If you are, that's cool, right? I'm happy for you, right? Or Kathy Woods, right? Who Kathy Wood hadn't been doing that great over the last couple of years either. But the point is that, guys, stay in the market no matter what you do. This is part of what you should be doing, right? Let's see here. I'm going to run back to the chat here. I got a few more things to talk about, but I really wanted to have this conversation with you guys, the people that come to my channel and frequent my channel, because I want you guys to know what is happening with the Fed funds rate and how it's going to affect us as consumers and us as investors. You got to be ready. Inflation went up. I don't think it's going to go up to the point it was a year and a half ago, but it went up month over month and year over year. The CPI reading, that's important. That's important for us to note. Let's see here. Somebody said, and I'm way back, guys, it's a good time to build a house if you have your own property. Let's see. On the flip side, I'm getting more from my high yield savings account right now. Absolutely. That's the flip side, right? The flip side is that your variable rate that you're getting, ROI, from your HYSA, high yield savings account, it's going to stay high for longer, right? If you got 4 or 5% from your high yield savings account, it's going to stay 4 or 5% for a few more months. That's great for you. More money for you, right? That's good, because when the Fed starts to lower that Fed funds rate, you're going to see your high yield savings account rate go down as well. Your interest go down as well, right? It happens, right? So let's see here. Somebody said McDonald's money now, just much Applebee's. I'm noticing more vehicles being driven with damage. That tells me more people cannot afford repairs. Good point. Let's see. Dollar Tree is now $1.25 tree. Interesting, Alan. What are you all doing to save money on food? Just curious about some tips. John, a couple things, John. You can be a couponer, or you can be extremely, extremely intent on how you buy food. Now, for me, I don't eat meat. I eat a very little bit of meat. Let me not say I'm not a true vegan, right? But I don't eat a lot of meat. I don't eat any beef. I don't really eat any chicken. I don't really eat any pork, right? So I'll have a little bit of wild caught salmon from time to time as well. But I don't eat meat on a daily basis, right? But the point is this: you can still go to the grocery store and save money if you're really super duper intentional with your money and you're strategic with what you buy. I like to buy dinners, right? So I like, if there's 2 or 3 dinners, I'll buy the stuff for 2 or 3 dinners and then all the peripheral stuff on the outside. But I got to be careful with buying food because I shop pretty expensive food, right? I talk about that on my video sometime. I'm pretty frugal, but when it comes to food, I'll spin a nice little grip, guys. If you guys got any tips for John on saving food, drop it in the chat for him. Let's see here. I'm thinking getting my house painted is a good time to make the investment. Maybe, Annie. It depends. Annie, it could be a good time to paint your house. Would you plan to stay in the house? Do you plan to sell the house in a couple of years? A lot of variables there. Let's see here. Forced fasting allows me to stay lean while keeping up with my student loan debt, right? Fantastic, right? Excuse me. I've been thinking about doing what I can do to pay off my student loan. Yes, please, John, Orion, pay off that student loan debt. Let's see here. Hey, everyone, but Ukraine getting all this money. Yeah, Jay, listen, Ukraine getting all this money. What's happening over in Gaza is getting all this money. Absolutely, right? Think about that. Let's say, please, Vanessa, I appreciate you, Vanessa. Guys, smash the like button for me. Please smash the like button for me. And also, drop me a comment after this video airs. I want to answer a few questions in the comments as well. Let's see here. I went back further than I should have went back. Let me see here. The Fed is a non-political. I already read that a long time ago. Let's see here. Nobody wants to leave. Yeah. Okay. Let's see. Okay. Let me stop sharing that, by the way. All right. Somebody said keep an eye on Bitcoin. Yeah. I'm not a Bitcoin guy. Point blank. I don't mind Bitcoin, but I'm not a big Bitcoin investor. So just to let you guys know. All right. I don't claim, and I don't claim Bitcoin, Ethereum, Shiba Inu, none of that stuff, guys. Let's see. Am I creating wealth with debt with those properties? Not sure who you're talking to, the quiet one. Let's see here. Somebody said okay, got to start fasting. Yeah. Got to open. Is it a good idea to open a HYSA, high yield savings account, and put my emergency fund in it? Richard, yes. It is. It's a good idea to do that. Go back 3 or 4 videos. I might link in here in the description box. We had a whole live for an hour and a half talking about HYSAs, high yield savings accounts, what to look for, how to open them, what to do, etc. So you might want to check that out as well. So yeah, guys, again, let's make sure we're clear. Don't jump out and in and out the market. Stay in the market all times, right? Always consider, I'm an index fund ETF guy. Buy and hold index funds, ETFs. Why? Because I believe in the American business. I believe American businesses over time will continue to thrive over the next 30 or 40 years. Because I believe that, I just invest in a bucket of businesses, right? I just invest in some ETFs. I just invest in some index funds because I believe S&P 500 is a good index, but there's other indexes, right? I just believe American businesses will continue to go up, right? That's why I like index funds, and I'm not a big individual stock guy, right? So as far as the Fed goes, guys, sometimes okay, so what happens this Friday, next Friday, about a week from now, what happens with the Fed funds rate, whether they raise it, they probably won't raise it. We pretty much know they won't raise it. Whether or not they'll lower it or keep it the same may have a slight effect on the market, the stock market, right? Right now, I think I read there's a 60% probability that the Fed is going to not do its first rate cut, lowering of rates until June of this year, right? That's a 60% chance right now, right? 80% chance that the Fed will have rate cuts before the July meeting. Why is that important? Because the stock market considers all that. The stock market builds those probabilities into what the market is doing right now, right? So the market is reacting to that the fact that there'll be There's a 60% chance there'll be rate cuts in June, which I believe that's the first time we'll see rate cuts, especially with the latest CPI numbers that came out that showed inflation still going up slightly, right? So just something for us investors to understand. Sort of a double-edged sword, to be honest with you guys. Think about it. If you're 65 years old and you're withdrawing your money from your investments, you got less money to invest, right? Right? It could be bad when the Fed says, oh, we're going to increase rates or we're going to leave rates the same, and it affects the market in a negative way. It's bad for you, right? But sometimes when we say it affects the market in a negative way and you see stocks go down because of what the Fed did, it's helpful for us as investors, right? As well. So could be a double-edged sword, right? I think the markets finished down a little bit today. Let's see what he. Dion, thank you so much for the $2 super chat. I appreciate it. Spend no money, any liquids, only drink water 24/7. Yeah, me too. I'd never buy drinks. If I go to a restaurant, I'm not buying drinks. I'm buying water for the most part. Let's see. Somebody said, how do you feel about ESPP? My company gives me 15% off their stock. I don't know what ESPP is. I'd have to look it up real quick. Oh, it's an employee stock purchase plan. Okay, it's a broad-based stock plan. You can use. Yeah, there's nothing wrong with that, right? Nothing wrong. It looks like you can get a discount on those. So yeah, I'm all for that. Nothing wrong with that at all. Caden, I think it was Caden. Somebody said, food, you have to make an effort to communicate what you need. There are people who visit food banks and pick up extra for others. Cool. Dollar cost averaging start. Kendall said, dollar cost averaging start or end of the month, monthly or weekly. For me, I do monthly, right? You can do weekly if you want, totally up to you. I do a monthly amount towards certain, of course, with my own personal payroll check, because I still have a job, that goes in every 2 weeks as well. But I do a monthly typically to my outside brokerage accounts. Let's see, so somebody said, does inflation matter with investing? King Lucas. I think we sort of answered that, but just to kind of make sure we hit it. Inflation, whatever is happening with inflation, deflation, whatever, still continue to dollar cost average and still continue to your investment strategy. Don't change your investment strategy based on what's happening temporarily with inflation. I say temporarily, could be 6 months, a year, year and a half. Still continue with your strategy. If you have a strategy, a portfolio strategy, an allocation strategy, whatever you have, continue to go with your strategy. Don't pay that much attention to inflation where it's going to affect your own personal investment strategy. Still dollar cost average, still put a little extra in towards the dips, and still continue what you're doing, King Lucas. Somebody said, I also know someone who is connected to someone that deals with grocers. I have received frozen food that was about to expire, but it's frozen solid would have been trash. Interesting. Let's see here. Will a rate cut bring back more inflation? That's the $100,000 question, right? Will a rate cut, because rate cuts are inflationary by design, right? By design. Rate cuts they don't force, but rate cuts incentivize us to go spend. And when we go spend, it keeps demand high. And when demand is high, what happens to prices? Prices go up. I don't care who you are. Somebody asked about price gouging for corporations earlier in the chat. Look, it's hard to call that, right? I always give this example. If I manufacture shirts, I make shirts and I sell shirts, and everybody wants my blue shirt, and my blue shirt's $10. Everybody got money. The demand is high. I'm not going to sell the shirt for $10 for long. It's going to go up to $10.50. It's going to go to $11. That's business, right? It's going to go, because it's not just going up to $11 because I want to make more money and I'm so greedy. It's going up to $11 because I got to keep up with demand. That means my machines have to work longer and harder. I have to hire 2 or 3 people, 5 people to help me out. I got to increase my payroll. And we all know that when you run a business, the most expensive thing is payroll. So I got to bring in 5 more people to help produce more shirts to keep up with the high demand, because the Fed lowered the rate. And so everybody wants to go borrow money to buy my shirt. And now it's increasing in demand. It's increasing the price that I'm charging for my shirts. Is that price gouging? Could be. Or could it be just the price of business? I'm trying to keep up with demand. The reason I give that example is because I want us as consumers to understand there's two sides to the coin. We're consumers and consuming, but there's also a businesses and businesses that a business and businesses that have to keep producing and producing and producing to keep up with our purchasing. And so we got to look at this thing from two sides. That's why, is there price gouging? Sure. I'm sure there is price gouging. Can I point to exactly what's price gouging and what's not? Maybe in some of the industries, maybe the oil industry, perhaps, right? They were making record prices when our inflation was, CPI was 9% a year and a half ago. Oil companies had record profits, right? And maybe was that price gouging? Perhaps, right? So it does happen. But I also want us to understand that the price of business to make these shirts, I got to bring on people, and I can't keep the shirts the shirts were $10 a piece when I was making them. Now that I got a team of 5, these shirts are $15 a piece. And $4 of that is going to pay my extra workers because the Fed decreased the Fed funds rate. Now, when the Fed increases the Fed funds rate, everybody ain't going to be out wanting my shirts because now they can't afford to go borrow the money to buy my shirts. So if they can't afford the money to buy my shirts, what happens to demand? It goes down because the Fed raised the interest rates. Demand goes down. I have to lower my price. I got to lay off those 5 workers and go back to making them myself. And now I charge $10. It's how business works in America, right? We got to be savvy enough as consumers to understand the business side. And some of us in this chat are probably business owners as well. So you understand what I'm saying, right? There's two sides to the coin. Let's see here. Yeah, Richard, check that video out on high yield savings accounts. Check it out. Pretty interesting. We dig pretty deep. Much love to you, O'Brien from the Bronx, New York. Keep up the good work, brother. You got it. Payday tomorrow. All right, Dion. Yeah, shoot me that. Yeah, no, I'm just kidding. Me and my husband argue about this question all the time when we listen to your show. What question is that, the quiet one? Go ahead and ask that question again. I might have missed it. Meal prep and creative use of any leftovers to keep groceries lower. Absolutely. I've ran into people, guys, that told me point blank, I don't eat leftovers. I'm saying, what? How can you live in America and not eat leftovers, right? The best leftovers, leftover spaghetti, right? But yeah, you got to be creative. You got to change some things around as the landscape and things are all changing right now around us. Can you create wealth with debt? Yes. If the asset you purchase with debt is going up in value, I believe you can. If you're buying a piece of real estate, an apartment complex, commercial building, whatever, where you can charge rents and the asset increases in value, yes. But other than that, no, that's the only place I use debt on, guys, is real estate. Let's see. I make way more money with an HYSA than I did having the money in the bank savings. Yes, absolutely. Kathy, you are right. I need to get back. Dion said they force your hand. I have a friend that tells me to purchase U.S. Treasury bonds. I don't have a problem with U.S. Treasury bonds, okay, if it's only a small portion of your portfolio, okay? So I don't want you to have 80% of your money in bonds. I really don't, right? Unless you are just super duper nervous and scared, right? You shouldn't have 80% of your money in bonds. If you want to do an 80-20 portfolio and you're getting older and you want less volatility in your money, then an 80-20 portfolio where 80% of your money is not in bonds, is in equities, and 20% of your money is in bonds, I'm okay with that. Or a 90-10 or even a 70-30. 70% of your money in equities and 30% in bonds, I'm cool with that, right? I'm not a big bond guy, but if you want to have 10-20% of your money, but if you're 35 years old, you shouldn't have 30% of your money tied up into bonds, right? You got to get out there and take some risk. So I don't mind treasury bonds. I don't even mind some corporate bonds, depending on, their rating, right? Bonds have a rating, right? So some municipal bonds, some munis, that's cool too, but not a huge part of your portfolio, especially the younger you are. If you're 75 years old or older and you want to have 40 or 50% of your money, 30, 40, 50% of your money in bonds because you want the safety of bonds, I'm not going to be mad at you for that. But if you're 35, I'm going to be really upset at you about that because you're not taking any risk. Say, hope that answers. The quiet one, thank you so much for the $10 super chat. I appreciate you more than you know. Can you create wealth with debt? And so I think that's the question you and your spouse argue about. Yes, you can if it's on assets going up in value. I hope I answered that question. So thank you so much for the super chat. I appreciate that. Let's see. Somebody said, I don't care what the market is doing. Yes. Warning to Americans. The Fed is on standby because they're not sure when to lower rates, when to cut rates. Possibly you can get ready for another month of increased inflation. My charge to you, Americans, or people that are invested in the stock market here in America, no matter what they do with the Fed funds rate, keep dollar cost averaging into the stock market for the long haul. Don't time the market, spend lots of time in the market, right? Very, very important. Let's see here. Yeah, bonds. Somebody said, I don't fully understand bonds. Bonds are just so you guys know, the bond market is way bigger than the stock market. Okay. The bond market is just debt. You're buying debt. Bonds are debt. I'm not going to go too deep into this, but a bond is simply a loan from the person who issues the bond. I'm sorry, I said it backwards. From the person who buys the bond to the person that issued the bond. So if I create a bond and I sell you a bond, and now I give you a piece of paper, but I owe you money, right? A bond is a loan. That's all a bond is. And the bond market is the debt market, right? You are investing in the debt market, and it's way bigger and it's way more complicated than the stock market. Just so you know, bonds are very, very complicated, guys. It's not something super easy to know, right? And governments sell bonds. America sells bonds. Do you guys know who the largest bond holder that America owes money to? The one country? Countries issue bonds, and people buy the bonds, buy the debt from countries. Do you guys know what country America owes the most money to for purchasing the most of America's bonds? There's one country that sits at the top, and America owes that country more money than ever, right? America has over $34 trillion in debt. I think at least almost 1 or 2 trillion come from this one country. One country America owes the most to because they're the one country that has bought the most bonds from America. All right, we got a few. Somebody says, can you explain dollar cost averaging? I don't fully understand. I'll get to that question in just a moment. Let me answer this question. The one country that America owes the most money to for purchasing the most U.S. government bonds is Japan right now. It's not China, it's Japan, right? China's up there, I think 3rd, 4th, 5th on the list, but it owes the most to Japan right now. Somebody said, can you explain dollar cost averaging for those Americans that want to stay in the market? Dollar cost averaging is just putting a certain set amount of money invested into the stock market over a certain set interval of time, every week, every 2 weeks, every month, every 3 months. You're putting the same amount in the market no matter what the market's doing. Bear market or bull market, bear market, market's great, market's horrible, doesn't matter. You're still putting your same $200 into the stock market the whole time. It doesn't matter. Over the long haul, 5 years, 10 years, 20 years, the person who dollar cost averages into the stock market wins over the person who's trying to guess and jump in and jump out and jump in. And that person doesn't win. The person that dollar cost average, they win. That's a term from 70, 80 years ago, right? Dollar cost averaging. What's the name of the book? Can't think of the book. Maybe I can think of it, put it in the chat for me. But dollar cost average, guys, right? That's all you got to do. That's what that means. Somebody said, yes, Japan is way up there, man. Japan is, but bonds are pretty complicated, guys. The bond market is not easy to understand. You got your 10-year, 5-year yields, all this stuff. And I did a video a while back talking about bonds that you might find on my channel here on YouTube. But There's a lot to it. It's not as simple as the stock market. Stock market's way more cut and dry than bonds. John Early, Jerry Early, thank you so much for the super chat. I appreciate you being here. I appreciate you as a listener, as a supporter, and a subscriber. Thank you so much. Jerry said, thank you, Smart Money Bro. I appreciate that more than you know. Guys, this video is all about a warning to us Americans as consumers and as investors, right? The Fed is waiting. The Fed is trying to see what they're going to do. We have to get ready as consumers and investors as well, right? Now, when I say get ready, I don't mean panic. We don't want to panic. We don't want to focus on the ticker symbol at the bottom of the screen, the breaking news, and reading all the ticker symbols, right? As I told you, I'm not an individual stock market guy. I'm an individual stock guy. I'm an ETF and an index fund guy. So, I don't have to watch the markets like some folks watch the market, right? I just don't. Blue Sky kicking it off with another super chat. I appreciate you, Blue Sky. Thank you so much for that super chat. You can always ask a question in your super chats, guys, and I will definitely answer your question and highlight it. And then let's see. Somebody said, how do you dollar cost average if you don't have a steady stream of income? Millie Mill, that's a good question. Millie Mill, let me ask you this question. How do you pay rent if you don't have a steady stream of income? The same way you pay rent with this unsteady stream of income is the same way you invest with this unsteady stream of income, right? I always tell people that if you want to be paying yourself first, that means what you invest, if it's not taken out of your check automatically, it should be at the top of your budget. It should be right up there next to rent, food, invest for my future. Rent, food, giving, invest for my future. Rent, invest for my future, giving, lights and water. It should be right up there at the top. So if you can make a way to pay rent on an income that's not steady, the same way you do that is the same way you figure a way to to invest dollar cost average on an income that's not steady, right? Somebody said I did a video about investing in various Vanguard ETFs. What is the differences between ETFs and stocks? ETFs is a bucket of stocks, guys. It's just a bucket of a whole bunch of stocks. It's like an index fund bucket with a whole bunch of stocks thrown in there. 50, 80, 100. In the case of the S&P 500 index, it's 506 or 507 companies in that bucket, right? So that's the only difference. An individual stock is one company. An ETF has hundreds of companies in that bucket, right? And ETFs can be traded throughout the day. Their price fluctuates throughout the day, like individual stocks, right? An ETF, it can go up and it can go down. It can go from 204 a share to 207 a share in a day, right? So it can fluctuate. That bucket of stocks is getting traded around, right? That's kind of the difference, right? Hope that helps. Let's see here. I'm trying to get a better understanding of that as well. Yeah, ETFs and stocks. So listen, we have all different levels of people in the chat, guys. We got some folks that they've been investing for years and years. They know this thing like the back of their hand. We got some folks that are new to investing. If you're new to investing, that's cool. There's nothing wrong with that at all. This is the right place to come because I'm not gonna talk over your head. I'm gonna try to deliver everything at a level that a sixth grader could understand it. And some of you may get frustrated about that. Or you may say, you're repeating yourself. Somebody said that in the chat the other day, comment section. And I do that because, listen, learning sometimes involves a little bit of repetition, right? And some folks don't have all of the knowledge that everybody has. And a lot of times we see these news stations and we see these investors on YouTube, and the investors on YouTube are talking like the news on Bloomberg News, financial news. And there's people that you shouldn't have to listen. I hope you guys, and you should, always do your own research always, but I want to talk in a way where you don't have to go Google everything I say, right? You don't have to go looking up what I'm talking about. When you're listening to me, you can just kind of understand the way I'm saying it in plain, easy to understand language. So when I talk about the Fed and the Fed funds rate, and I talk about inflation, CPI, headline inflation versus core PCE inflation, when I talk about those things, sometimes I like to reiterate what the definitions are so that I can catch the people up who don't quite understand, or who have been hearing this stuff all their life, but they still don't quite get a grasp of it, right? And those people are out there and they tune into this channel as well. So I don't want to, there's other channels where if you want to have the deep analysis and you want to sit and have the screen up all day with your two screens and you want to go over all the price fluctuations and the indicators that are happening with each individual stocks, or you want to investigate and go over profit loss statements and 10Ks and 10Qs, those channels exist. Nothing wrong with those channels. Those are cool, right? But I like to keep it basic on this channel so I can reach more people, right? Miss V checking in. I think Miss V always says she's from Seattle. Thank you so much for the super chat. I appreciate you more than you know, Miss V. And I appreciate your support, Miss V, as well. You're right. She said, you're right. You have to pay yourself first. Works for me. Absolutely. Put it at the top. Notice what I said at the top, though. Food, rent, or mortgage, giving, helping somebody else out. I don't care if it's $5 a week. I don't care if it's $5 a month. Help somebody else out with your money. It'll help your cup flow over. I guarantee you, right? That's a principle. Utilities, and pay yourself first, right? And transportation, right? All those things go at the top. Just so you know, when I do my budget, guys, I arrange my budget from priorities, right? Top to bottom. So pay yourself first, put it up there. Somebody said, I buy 3 ETFs a week. Brandon Love Cash. Fantastic. Good for you, Brandon. Let's see. I have a 70% index, 20% single stocks, long-term, and I trade with 10%. 200K portfolio, Sal. Nothing wrong with that, Sal Barajas. Thank you for being here. I like that. I like that allocation. Nothing wrong with that. I like the way you've thought that out. Smart. We got some smart people on my channel, guys. I hate to brag about you guys, but you guys are top-notch listeners. I mean, if you go back and watch this, I always say it, you can get so much information just by reading the chat section of some of these lives, guys. Tons of information, people sharing information. I appreciate that, and that's what I like to see. Every now and then we'll get that scammer that comes in the chat, but I try to remove them as quick as possible. So yeah, so that's the video today, guys. That's the live. Warning us as Americans, consumers, and investors, the Fed is on standby. Let's see what happens next week. Let's see what happens with the Fed funds rate next week. I think it's going to stay the same for the next 2 meetings. I think we may see a decrease in June in the Fed funds rate. But listen to me closely, guys. That's not a guarantee, okay? That's really not a guarantee. If we see another month of increase in inflation, month over month and year over year, there's a good chance that rate cuts may not happen until later on in the year. There's a very good chance we could be down to 2 or maybe 3 rate cuts, right? Just something to think about. As consumers, we want to know it. Is that going to affect how you invest? No. Keep doing what you're doing, guys. Miss V, I've been giving to the food bank for years because I grew up with food insecurity. Congratulations. Good job, Miss V. Good job. That's very important. Giving as much as you can. Time, energy, and money. Money. Come back with me, guys, on Saturday. Come back Saturday, 2 days from now, 11 a.m. We're going to have a grown folks conversation about money. Grown folks. If you're 21 in this watching this video, you can come check us out. But if you're 21 and you come up on Saturday, you're going to want to listen to everything we're going to have to say, because on Saturday, we're going to break this thing down. It's part 2. We did a first part last Saturday. This Saturday, we're going to put a part 2 of grown people having a conversation about money, meaning it always helps if you've been through some stuff and made some mistakes with money. The conversation changes a little bit, right? Depending on the amount of mistakes you've made with money over the years, right? The conversation I have when I do one-on-ones, and I do one-on-ones with folks to help them with their personal finances. There'll be a link to that in the chat below as well. But when I have the conversation with the 21-year-old, the conversation is different with the 41-year-old, right? It's a different conversation because the 41-year-old has seen some stuff. They've been through some stuff. That's the conversation we're having on Saturday. Everybody's invited. I don't care if you're 15 or 20 years old, you're invited, but I want you to just chill out and listen to what we talk about on Saturday, 11 o'clock Central Standard Time. We're going to go live again. I appreciate you guys more than you know. I hope that I was able to give you something of value. Every time I hit record, guys, I want to give you something of value that you may have known, may have not known. Maybe you need it reinforced. Maybe you need to hear it again. Maybe you need to have it explained to you. But I want to give you something of value. If you got something of value, please hit the like button. Hit that thumbs up button for me. Please feel free to share this link. One of the best ways you can help this channel grow is to share the links to the video, right? Just share them, right? And I know we got an election season coming up, guys, where we got the Democrats versus Republican, and we got the libertarians and all that. I try to do this thing on a neutral basis, guys. I try to do this thing in the middle because I know there's pros and cons to both sides of the aisle, right? There's really pros and cons to both sides of the aisle. And I try to stay money in these conversations. I try to say what's best for us as consumers in these conversations, or investors in these conversations. What's best for us to manage our own personal finances in these conversations, right? Somebody asked me in a comment last week, they said, well, what do you, somebody said, Trump 2024. And somebody said, what do you think about Biden? And what do you think about Trump? Listen, money is green. The best person who's going to take care of the old you is the young you, regardless of what your political affiliation is right now. That's the best person who's going to take care of the old you. It ain't going to matter if you, have you far left, far right, moderate left, moderate right. That ain't going to matter. Listen, I could jump on one. Let me just tell you guys this. I could jump on one side of that equation, that political equation. I can jump on one side and my channel would double or triple quickly, especially during election season. But guess what? We got enough entertainment out there. We got enough politics out there. We got enough people who with these strong opinions on one side of the aisle or the other. I want to be on the side that's your personal finances. I want to be on the side that's helping you win with money. I want to be on the side that's helping you become a better manager over your personal finances or become a better investor so you can grow more money for your future. That's the side I choose to be on, right? Somebody says, informative channel. I appreciate you. Appreciate you again, Miss V. Ryan, appreciate you here. Listen, guys, the best person who's going to take care of the old you is a young you. You guys do me a favor. Take good care of yourself. Check out the description box below and partake in some of the free stuff and take care of other people. Until the next video. Peace.